Hello listeners, I am Tushar Bharambe, Assistant Vice President at ICRA Limited. Through this podcast, I'll be sharing our views on the residential real estate sector. ICRA expects the area sold in the top 7 cities of India, which includes MMR, NCR, Bangalore, Hyderabad, Pune, Kolkata, and Chennai, to increase by 10 to 12% to 785 to 800 million square feet in FY25 on a high base of FY24. Despite the moderation in sales growth rate, the overall sales velocity, collections, and inventory position are estimated to remain healthy. The launches are expected to rise by 12% year on year to 767 million square feet in FY25 on an aggregate basis across the top 7 cities, supported by decadal low inventory, comfortable years to sell, and healthy demand. The inventory declined to 687 million square feet as of June 2024 from 732 million square feet as of March 2023, and the years to sell remained low at zero point 0.9 times as of June 2024, backed by healthy sales and calibrated launches. With epic sales and low leverage, the dream run continues for residential real estate players. The residential sales witnessed a healthy growth of 19% year on year in FY24. The sales consistently reached new peaks in each successive quarter over the past 8 quarters despite elevated home loan interest rates and rising property prices, except for Q1 of FY24 and FY25, given that the first quarters are traditionally laggards. Area sold in the top 7 cities in Q1 FY25 witnessed a moderate growth of 7% year on year due to lower launches, which are deferred to subsequent quarters. Despite sluggish first quarter, ICRA expects double-digit growth in residential sales in the top 7 cities, driven by strong end-user demand and the healthy albeit moderating affordability. The replacement ratio, calculated as launches to sales in last 12 months, stood at 0.9 times and is likely to sustain around 1 time for FY25. While the gross debt is expected to increase by 6 to 7% in FY25 for new business development, in addition to the increase in construction finance debt due to a ramp up in project execution, the leverage measured by the ratio of gross debt to cash flow from operations is likely to remain comfortable in the range of 1.55 to 1.6 times as of March 2025 compared to 1.63 times as of March 2024 due to an increase in the cash flow from operations. The average sales price rose by 11% in FY24 on a year-on-year basis and is expected to further increase by 5 to 6% in FY25. This is driven by a change in the product mix with a higher share of luxury units and pricing flexibility arising out of healthy sales and the resultant lower inventory overhang. Given the pandemic-induced desire for larger spaces and changing consumer demand, developers have accordingly realigned their launches. The leverage is estimated to remain comfortable as of March 2025 despite the expected increase in gross debt levels supported by healthy cash flows. The outlook on the residential real estate sector is stable. With this, we come to the end of this podcast. Thank you for listening and stay tuned for the upcoming podcast.